Welcome to another market update. This is July the 31st, Sunday, after the market closed on Friday the 29th. So let's look at the very big picture as always to start off with. This is going back to 1998, and you can see the whole cycles here for the composite index, which is all the indexes of the New York Stock Exchange all blended together as one: S&P 500, Dow Jones, Nasdaq, etc. So as we can see, we had that big fall in February, and it's still, we were seeing new high headlines for the S&P 500 and Nasdaq, but as a whole, we haven't seen a new high yet for the whole index. So it's kind of like a non-confirmation going on here. That's not to detract from what is obviously very bullish action in recent weeks. If I zoom in a bit, this is just a few years of the NYA. According to this chart, which is the one I prefer to use right now, this is still a very piggish market. We've got a sideways action. We've got not a bear, it's not a bull. But if we suddenly went to the S&P 500, which some could argue that's the one you should look at, I would disagree, especially currently, and you'd see a different picture. But even then, you're not saying that all the ticks in the boxes to say unanimous bull market. We have got new highs. It's rising up. We've got the RSI well above 55. The blue line, which is a 40-week line, is starting to point upwards. Over a 6-month period, though, it's still quite flat if you trended it sideways. And it's still just about underneath the 70-week line. For a confirmation of a bull market, a new bull market for this index alone anyway, I'd want to see 6 months of that blue line pointing up and above the red line. So it's definitely a better picture. But a lot of reason for caution, anyone saying, brand new bull market, because I don't think it's there yet. The other thing that's starting to worry me is I've mentioned before how high valuations are currently. If you're looking at true earnings, the true earnings picture, it's over 25 now, in the face of what came out on Friday as disappointingly low gross domestic product figures for the last quarter in the States. So and also revising down previous quarters. So that's an ominous picture, but stocks can continue to go up in the face of that. They did that in 2007. They were actually in a technical recession in late 2007, but stocks kept going up. So that's the stock is flying in the face of a lot of fundamental reasons for it to go down. And the other thing is, as I said, they're looking for. I'm hearing now talk of there's a new valuation criteria for looking at stocks based on all the low and negative interest rates that are going on in the world. And as always, it sounds convincing, but it also sounds very reminiscent of 1999, the whole dot-com bubble. And this is very symptomatic of what is often the case right before things go south. But if you recall, in 1999, stocks kept on going up, even well after all this nonsense. So we have to be aware of that. So I'm shifting now into more of a cautious foot in the water, toe in the water kind of, bullish. If there's some tradable rallies that last, I'm only talking about in and out trades lasting a few weeks though, while I'm biding my time. Because of course, what I obviously want to do is to short this market. This market will fall within the next year or two, in my opinion. But the timing's got to be right. I don't want to be shorting the market right now because it still could fly higher. Here's the weekly chart, sort of zooming in a bit more now, and again there you can see it broke out above resistance here. It could be just having a brief sort of turnaround, but if I look at the daily chart here of the S&P 500. But by the way, a lot of people are looking at this right now. If you haven't done any of my courses on, how to read a stock chart, then, you need to look at one of those. And that will explain more about what I'm talking about. But here, this is a very tight little sideways pattern here. And if I was looking at this as a stock, I would say that was a great opportunity because it's got a very tight range there. It's got a nice sort of tight stop loss if you were to trade that. Not much downside with excuse me. Looks like it's just biding its time to kind of, it's almost like we look at like a refueling stage before it gets digests its gains before looking at another leg higher. So we may have some short-term pullbacks, but it looks like it's limited. Every time this market looks like it's going down, buying force steps in which I would add, without wanting to sound too conspiratorial, with the presidential election in November, is probably no accident. So the long-term trend, I would say, is piggish. But the short-term trend, which is the one that really affects our, as traders, if we're trading on like a 2-week to 4-week or a kind of, time frame, which is generally what traders do, the long-term trend isn't going to be as powerful as the short-term trend. The short-term trend looks kind of neutral right now, but I would say getting ready to go higher. Overall, though, if you want a quick and dirty version of it, there's the RSI, 64%. You've got to argue that the short-term trend is definitely bullish. And that's the one we look at trading with. So that concludes the market update. And for 99 Club members, there'll be a separate video on some individual opportunities.